Well, amid all the ire about Wall Street pay, bonuses shot up 17% in 2009 from the year before. Profit expected to hit yet another record at $55 billion. These are the findings in a new report out from New York State Comptroller Tom DiNapoli, and that report out, by the way, at 11 a.m. You're getting this first-hand look or a preview of it, really. And great to have you with us here. Now, this number, up 17% for bonuses. Is this a reasonable gain given these times?
Well, Wall Street's back. We've been saying that for some period of time, and this is part of our annual assessment. We do this once a year to see what the bonus pool is. So no surprise when Wall Street's making profits that bonus pool would be up. For New York State, there's some good news in that. Our revenues have been hit very hard by the recession, but it is a bitter pill for most New Yorkers, for most Americans. Unemployment is still at record numbers in our state, many states across the nation. So although Wall Street has come back, Main Street obviously is still hurting.
But these numbers are actually probably even higher than this, though, right? Because you're not counting deferred compensation. Correct. You're not counting compensation given in stock options, for instance, right?
We're counting cash and any deferred compensation where tax is being paid up front.
Okay, so we're not just talking up 17. We're probably talking a much bigger gain than that then.
Although the good news with some of the restructuring and deferring some of those bonuses to the future is that it does put a premium on sustainable growth and less risk-taking than we had in the past. So,
what do you mean by sustainable growth?
You have a long-term commitment then to being sure that the profitability continues, so that the stock still has value. And I think that's one of the lessons we need to learn from what went wrong. We've had peaks and valleys before. It would be preferable to have predictable growth, predictable profitability, certainly from our point of view, from a New York State perspective, where we have tough budget situations. We depend on Wall Street to be profitable, but the highs and the lows, to go from the kind of losses we had a year ago of over $40 billion, and we're projecting this year a record increase, $55 billion of profit.
So you're okay. You're okay, though, if Wall Street permanently shrinks its pay.
Well, keep in mind for New York, as long as it's still making money, and if it's on a more predictable level, that's good. For New York, Wall Street is like oil is to Texas or the auto industry is to Michigan. So we need it to be profitable, and we know over time that every job added on Wall Street adds as many as 3 jobs in other parts of our economy. So Wall Street coming back is a good thing, but we want to be sure it doesn't come back in a way where the risky behavior we had in the past that resulted in the meltdown and the national and global recession doesn't come back, because everybody hurts from that.
Now, one of the things I read in this report was that compensation as a percentage of revenue, or actually just overall compensation as a percentage of revenue, has gone down to 40%, right?
From 50%.
From 50%.
Before,
You think it's going to stay that way and go lower?
Hard to tell. I mean, that's one of the big question marks, is what we're seeing, is it permanent, or is it just a short-term reaction to the criticism that Wall Street has faced? It's probably too soon to tell. There's obviously a lot happening in Washington being debated about oversight and putting some teeth in terms of ensuring that some of these changes in behavior will be institutionalized or at least be monitored in a more aggressive way. It remains to be seen how some of that will play out. So if there is more regulation, more oversight, perhaps that trend will continue. If perhaps that doesn't happen, it'll be up to the industry, in terms of self-regulation.
What do you see? I mean, I'm curious to know what is your opinion? You think it's permanent or not?
My hope would be that we have Wall Street with sustained profitability. That from a revenue point of view, and New York, depending on the sector, for our budget health, we certainly need Wall Street to be profitable. It's a key part of our economy, the key engine for our economy. But the highs and lows that we've been going through over past years really doesn't serve anybody well. What's happened is that we've built our budget around an expectation that the highs are always there. So when the lows come in, we have a terrible year like 08, we have all these budget shortfalls. That's a big reason for it. So Wall Street making money again, but at a sustained level, a more moderate level, as long as it's consistent and it's ongoing, that will benefit our economy, benefit other jobs in the sector as well.